You're watching this Forex Preview video here at XM.com. We'll be having a look at the Fed minutes and preliminary PMIs out this week. I'm Christina Marujos. Joining me today is investment analyst Marios Chatsikiriakos. And even though the Fed minutes are released on Wednesday, it appears that they don't have any significant revelation in store. Therefore, markets will rather shift their attention to preliminary PMIs for February out on Friday. Now, the American economy has been fairly strong. Do you think we'll get some insight from these reports, from these preliminary PMIs on the coronavirus outbreak, on how or if it affected global growth?
I think we will. So this will be the first data for February. This will really be the first figures to show what kind of impact, if any, the coronavirus had on sentiment mostly at this point on the American economy. Now, yes, the American economy has been quite strong lately, has been strong overall, but we've also seen some warning signs lately, some signs of a slowdown. So, for example, real wages have cooled down. Consumption has also slowed. Investment in Q4 actually contracted. Now, we are getting some signs that the American economy is gradually losing steam. But at the same time, the overall situation is still fine. Growth is still running at around 2%. The jobs market is adding jobs at a pretty robust pace. The manufacturing sector finally stopped contracting. And importantly for me, consumer confidence remains high, which is a signal that the recession is not imminent in the US. Now, contrast this to Europe and Japan. Both economies are barely growing, and both economies are more exposed to China than America is. So if we do see a severe slowdown in China due to the coronavirus, that's probably going to hurt Europe and Japan more than it will the American economy. So in that sense, I would argue that we may see signs of damage in the PMIs on Friday, but I think we will see even bigger signs of damage in the European PMIs that are coming out on the same day.
And turning to the dollar now, it has been on, dare I say, a rally lately. Do you think the reports this week could further support it?
I do, in the sense that even if we do see a decline in the American PMIs, I think we're going to see a bigger decline in the European ones, and that favors the dollar. Now, in the big picture, I think that the outlook for the dollar is still positive. There's really nowhere else to go at this point. Europe and Japan, as we said, are barely growing. Both might be facing the risk of a recession before long if this whole China slowdown theme picks up steam. And interest rates in both Europe and Japan are much, much lower than the US is. So that is creating a carry trade in favor of the dollar. So I think that the outlook for the dollar is positive, and for that to change, for me to be able to call for losses in the dollar, I would need to see either of two things. Either the Fed has to start cutting rates quite aggressively, more aggressively than what is priced in to the market already, which is 1.5 rate cuts by year end, or alternatively, the Eurozone needs to launch a spending package to boost growth there. And that is not looking likely either. So unless one of these two things happens, which I don't think it will anytime soon, I would argue that it's going to be a favorable period for the dollar going forward.
I see. Marios, thank you for joining me today. And thank you for watching this Forex Preview here at XM.com.